Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre, the independent speculator. Our victim of the day is Robert Vallis. He's CEO of Tiger Gold. Now, he gets kudos for such a cool name for the company, but I can't be biased by that. um, uh, Robert, why don't you go ahead and tell us about what you're working on, and then I've got some questions.
Absolutely. Lobo, first of all, thank you for having me. Tiger Gold's relatively new company. We listed in late last year in December. We have a property in Colombia, the Quinchia project, of which we're actively drilling now, growing the resource basis of which we hold over 2 million ounces in current compliant resources, as well as a recent PEA supporting those ounces. So this year we've got three drill rigs focused on expanding drill programs and our knowledge of those assets. We've drilled over 11,000, 12,000 meters so far. We've just started the second round of 10,000 meters, all towards identifying and growing the resources we have. We're certainly projecting from everything that we have disclosed to date, in short, a significant growth in our resource base towards a doubling by the end of the year with the drilling, and then early in the new year, following up with an update to a PEA that would suggest a significant growth in the project and its value.
Admirably pithy. I get it. Okay, growth story. But the very first question has to be political risk Colombia. The headlines recently have not been that great. Not necessarily anti-mining, but just violence in general. 10, 15 years ago, the story was Colombia coming out of this dark period, and now it seems like it's backsliding. Can you help investors get comfortable with Colombia risk?
Yeah, I mean, everything that comes through on the news has to be contextualized for sure, depending on its source and so forth. Colombia has gone through a lot over the last decade, at least, that I've witnessed being in and out of there with larger companies. But they've come a very long way to locking down and securing and growing their country, their access to skilled labor, the infrastructure, the access to low-cost hydropower, so on and so on. But even more interestingly, their commitment to the mineral industry. Despite having a left-wing leaning government for the last 4 years, which has now shifted, right, towards the right with the recent elections, they've continued to issue permits during that time. One of them has been to the Miraflores project that we hold within the Quinchia project. So from that perspective, it's quite impressive in terms of the opportunity for foreign investment to pour in, to commit to and manage any of the risks associated with being in any foreign country. Colombia in particular has been very supportive of foreign entities. When it comes to, well, I guess what you see from uh, more nefarious FARC type related, uh, you know, groups. A lot of that has been uh, marginalized, shall we say, for the last decade. And what we're seeing now, when I say we, it's the collective Colombian people and then the entity, is seeing a fragmentation of that into competing small groups. So it's really continuing to reduce, and that upswelling of violence and other things you see on the fringes geographically and of the country itself is related directly to that. So there continues to be a very focused effort by the Colombian authorities to continue to contain and reduce that. And I think they've been doing an excellent job. I mean, when you look at where we are in Colombia, just 15 miles up the road from us, you have two of, I think, some of the top gold projects on the planet. When it comes to Arias producing by the end of this year upwards of 500,000 ounces per their plan, already producing 250,000. And next door to them, a collective, I should say, it's got an incredible high grade, very rare discovery that's there. So in the area we're immediately in, there is a real uh, focus on security, the quality of infrastructure, access to the skilled labor that's been growing exponentially in the cities such as Bogota, which is now really a university city, and Medellin has become a shining business center in South America, competing with other jurisdictions. So from our perspective, to sum that up, it really is a jurisdiction that's not only safe to come into, provide focus and capital into to grow, but we've got the support of the country, and what we're seeing on the ground is all of the elements you'd hope to see in any foreign jurisdiction. You've got support of your stakeholders. You've got access to all of the items I spoke earlier, the enablers, if you will, for constructability and operability. So it really is checking all the boxes, and we simply don't see a degradation or a significant risk there that is really curtailing any of our efforts to grow and expand and bring value to shareholders through
So two
projects.
things. One, if one of your assets has recently been permitted, it's hard to get a better answer than that on the permitting side of the political risk question. On the more country risk side, I mean, I remember going to Baritica, and not long afterwards, one of Continental's people got shot. And I also remember going to Marmato back in the day, and the driver didn't want to go into the town. So, I mean, I'm not trying to put you on the spot, but let's just say even military support doesn't always prevent tragedies. And in today's world post Vizsla, investors are very sensitive to this. So without getting you into trouble, I mean, reassure me that you're taking security seriously and that you have resources on the ground to protect your people.
Uh, well, most certainly we do. That was one of the fundamental risk management elements, that I identify with all the projects I've worked in through my career, particularly this one, given, uh, the history of it. So we have a very strong security group. These are ex-Colombian military individuals, high-ranking. They're very connected with the authorities, be it the police, the military, and so forth. There's a real ring, if you will, concentric rings of security and support that we have in and amongst and surrounding our project, which is, around other communities that obviously benefit from that as well. But again, we simply don't see that. And from my perspective, and now having been on the ground for some time, it has to be contextualized that yes, there's elements and issues that are happening in other parts of the country. In fact, I would challenge anyone on that any country and jurisdiction has similar aspects to it, particularly throughout Central and South America. But that said, and even in North America for that matter, but the challenges are not such that they are front and center day-to-day risks that we're having to uh, be challenged with and mitigate and work with. It's about being preventative. It's about being aware. It's about having excellent intelligence on the ground, having good communication flow in both directions with our stakeholders, with the authorities, and so forth. And from that, we've been able to not only enter into, but grow, sustain, and continue to grow uh, a series of activities and an operation in Colombia that's just phenomenal compared to projects, our team has worked in all over the world. So it's from that
Right.
perspective, something I refer to as a tier one emerging jurisdiction. It really does check all those boxes for these reasons.
Segueing off, you just said, I don't believe we've met. I don't recognize you. If I've forgotten your face, forgive me. I have a better memory for rocks, but who are you and why should investors trust you to be? I mean, you're this white guy. You look like a Canadian. Why should we trust you to run this Colombian exploration company?
I'm not sure what a Canadian looks like, but I am white. Yes, look, my background is one that is deeply rooted in this industry, 100%. I started my career as a mine engineer, working with Barrick Gold for a long tenure, over 15 years, cutting my teeth there for well over a decade globally in jurisdictions and operations from, all forms, shapes, and sizes. So, determining my skills and capabilities as an engineer and as an operator and mine builder and so forth has been established. It's really since the applying that into the business side, the M&A side, which I changed over into as well. Been part of massive transformational deals, the acquisition of Placer Dome for Barrick, with Yamana, the acquisition of a Cisco, teamed up with Agnico on that. Story for the Cerro Moro asset. We can go on, but it's a very broad, deep skill set and experience and exposure into this industry from finding, evaluating, acquiring, then into building and operating projects that I bring to the table is not only that, and of course, surrounding myself with individuals that have similar ilk, by the way, and are better at their respective areas of focus than I am. That's the focus of good leadership, I think. But it's the discipline that I bring to the table personally and with the team in terms of us knowing exactly what we have to do to deliver to shareholders and to our stakeholders projects that are, reliable and predictable and safe and responsible. We know that recipe. We've done it time and time again. It is what we bring to Tiger Gold and to this particular set of assets that we're focusing 100% of that, towards and unlocking. So we're quite
Fair answer.
confident in
Sorry,
our
let me
ability
jump
to
in with
do
an
it.
unfair question. Just this is unfair, but it just struck me as you were speaking. I've known a lot of geologists who made the transition to CEO, but not a lot of mine engineers. Why do you suppose that might be?
I think I don't know the stats on it nowadays but from my extensive M&A background, the majority of companies out there are in the earlier stage. They're not in development stage. They're in, many of them pre-resource.
Okay. So if most of the juniors are explorers, then having an explorer at the helm makes more sense. Well, that's a fair answer.
Not necessarily. That's not what I'm saying. I'm
Okay,
saying
sorry, go
that,
ahead.
to answer your first question, plethora of projects out there are grassroots and moving through developing resources. Others are not and have, folks from my background, for example. I think it's a tactical and strategic advantage to have folks with our background there at this early stage. And it's early, arguably, that we're entering into development stage of the project, transitioning as an exploration company solely into developing a project. Having that, what I spoke earlier, that discipline, but it's also the visibility. We can see all the way to the horizon, understand what it takes to get to that endpoint of being a responsible producer and work backwards from that. So having that set of skills, the vision, the experience in doing that aids every step all the way back to now. So basically we plan in reverse and execute forward.
I
Uh,
actually I agree with that. It's striking to me how they don't want to insult my good friends who are geologists, but they fall in love with the rocks. And an engineer, a mine engineer anyway, will say, "Yeah, but how do we mine that? And how do we make money on that?"
Yeah, it's where the reality kicks in. And look, you need passions across the board with all of the disciplines. There's no doubt. Passionate geologists are uh, not difficult to find, but when it comes to an understanding of what the implications of being passionate about a discovery are, is rare. And I think we have all of that within Tiger, a very disciplined geology team, exploration team that appreciates and understands and benefits from the view of, well, what does all this mean? To your point, how do you extract it? What are the implications to even consider the steps to unlock that? It's multifaceted from here on in, and
Okay, so let's talk about your rocks then. You've done 11, 12,000 meters of drilling, you said, but you've already got a PEA. So you obviously picked up an asset that was already somewhat advanced. Tell me a little bit, how did you get this? And if it's any good, why was it for sale?
those 2 million ounces were historic JORC resources for one. They were held by an Australian junior at the time who had stepped back from the project already for over 2 years and had it on care and maintenance. I think because of its lower grade initially, that, when it comes to, and I know this well, the evaluation process and combing through opportunities, a lot of folks are led by grade, and that's fine if that's the only thing you're looking for. Really, though, the secret sauce is looking for something that delivers value and has good margins. Grade doesn't always dictate that, and we've demonstrated that in the PEA we have. So I think it slid under the radar for that reason. But the discipline, as I said, we bring to the table, there were elements there that just beyond grade was checking every box for me in terms of constructability and operability, more than most I've seen globally. And that's saying something, whether it's access to the project itself. We have paved roads going right by us, a highway, grid power running through our property, on and on I can go. When you put that together, it starts to paint a picture of something that doesn't have similar requirements for cost and operating costs that other projects may have, that lower grade opportunities may not be able to overcome and generate, valuable margins. This is not that. This is able to overcome that, is able to generate significant margins. We're focused on scale now. Obviously, we're not pretending this is something it's not. It's not like our neighbors. Obviously, they have different discoveries there. And we're not saying that we don't have potential for similar discoveries. Geologically, we absolutely believe there's higher grade opportunities on the property. But within the nexus of, and the nucleus, if you will, of value that's been discovered to date, everywhere we turn, we're finding valuable economic ounces. And that's what we're
So
on.
help me understand that. I mean,
Yeah.
0.45, as I recall from the last resource, that's on the low end of middling. And you've got topographical challenges, but it looks like somehow you still have a pretty low strip ratio. And do you have a handle on the metallurgy to have confidence? What are the critical pieces that make something of that, let's not say low grade, but modest grade, work out fairly well at a fairly now conservative gold price in your PEA?
These are excellent questions. I know I didn't answer how we got the project, but I can come back to
Oh,
it if you like.
we can
If
go
you
back to
like,
that.
but I'll answer this one. What you're talking about is what I was speaking about just now, which is digging into the elements that drive value. Okay. For Tesorito, we have enough knowledge on around the metallurgy to know, for example, that it's very sensitive to grade. So even a small increase of grade, which we're focused on delivering in Tesla, by the way, will generate a more material increase in recovery and therefore your free cash flow. So it's really just turning up the value on free value, if you will. I know it's not free because we're drilling the meters to get it, but it's a one-to-one, area of value to be given to shareholders and the value of the project by doing that. Miraflores, as another example, albeit it's only 20% of the ounces that's in the PEA, they're higher grade, but it has a 70% gravity recovery, which means 70% of the ounces there don't need to go through a mill. So we don't need those ounces, or rather that material, to increase the size and scale and operating costs of the plant. You can reduce that. And so it's all of these hidden things that add, that kind of value is what we're uncovering. And we already know, for example, on your question about strip ratio, that yes, the strip is incredible for Tesorito. And in fact, it will get lower when we update the resource. And, I've got other engineers scratching their heads saying, it's great, but where are we going to get waste rock to build roads and that? Well, we've got that figured out. But I'm just saying that these are nice problems to have that increase profit margins and reduce risk. So Teso presents that while the topography is, even though there's, pretty variable relief there, if you will, the elevation doesn't get much past 1,500 meters above sea.
Uh, that
So
was
you're
another question
talking
of mine.
about,
So you're below the Paramo
oh,
level.
very much so, which I know very well. And having worked in the Andes for years and years, it's nowhere near that scale of altitude and complexity. And if you push it even farther in terms of enablers, Tesorito sits in a natural bowl, which is incredible. And it's rare to find that. So that contributes
Well,
to the
wait. Unless the deposit itself is bowl shape, how is that good? Because if you push back your pit walls, you're going to run into mountains on the sides of your bowl
because
line.
it's where it is relative to the pit walls and what kind of high wall we need or don't need. In this case, we don't have to pull back that far and have high walls that are uncontrollable. And we don't simply have the elevations that drive high walls like you're thinking. We're not talking about up against something that's, 2 kilometers high. It's 100, 200 meters. So when you add all of that up, even now at the PEA level, the engineering is very clear. And we've over-engineered with that PEA with Asenco, by the way, who's our partner. And we'll be progressing the engineering to the update even further. But that sort of knowledge is what informs the value and the opportunity here. The new discovery that we're drilling aggressively now next door to Seabell, literally contiguous with it, Seabell, it's called, contiguous with Tesorito. It too has a similar, condition where it sits in a bowl-like structure. But again, it's not this, super tight, funnel bowl. It's just conducive to your ability to contain and control the footprint of the project and all the other things that come out of that, and really allows for a very tight infrastructure setup where we can now have supreme confidence of centralizing our infrastructure and continuing to add feed as we're doing to this scenario. So it really is conducive to a lot of those elements that drive value. That is really what we uncovered early as we came into this, but also knew that would likely uncover more of those enablers, and we are. So it's got a lot of attractive elements that really drive value that a lot of other projects of its scale and grade, if you will, do not have, right?
So, okay, so I wasn't prepared for this question, but if you've got a second resource coming together nearby, and you actually, deliver a 43-101 on that, and now we're looking at two pits, does one become a waste disposal unit for the first pit? Do you
Well,
sequence
that's
that?
where all the magic comes with the advancement of engineering. And while we're starting up our engineering engines now, that's really in preparation for pre-feasibility, which is a year out from now, ideally, right? If we get through all the things we want to do. Uh, so when it comes to that, you have to begin exploring and answering some of those questions as you can. So the PEA update will be what I refer to as a pit stop along the way to starting up our
Sorry,
pre-feasibility.
but why bother doing that if you have potentially, not if not game changer, then at least mine plan changer discoveries shaping up? Why update the PEA?
For one simple reason, and to answer your previous question as well, scale. Uh, when you're talking lower grade material, you need scale to at least show longevity and a measure of production that is able to generate significant free cash flow, and with significant margins at the pricing we're at. Pardon me, at the metal prices we're at and long-term consensus, at the costing that we've begun to flesh out quite aggressively in the first PEA, we're very competitive in terms of the grade and so forth. So adding that extra resource adds more of the same, but also with Tesorito, increasing the quality of that resource, increasing the grade, the tons and so forth, really begins to expand the scope and scale of this project. And that is what that PEA would be focused on. That the first PEA was, here's what we have in situ today. This is what we've walked in. This is what we've acquired. This is what it's worth. This is what we can do with it. That's just where the ground and shoulders we're standing on to be where we are today and beyond. So it is all about scale and value, and to do that in a way that's smart, that doesn't require blowouts in capital, that we can keep the capital costs down, keep their operating costs competitive. And as I've alluded to, with very low strip ratios, consolidated infrastructure, and so on. There's a lot of opportunity here to present a much larger scale, higher valued project with not much more capital. So it's
Understood. I like the way you wave your arms doing that. So
sorry,
you are
uh,
Canadian, see? All
I'm
right.
an East Coast Canadian originally, so I think that's where a lot of that comes from. So
All right. Okay, so talk to me a little bit more about the exploration then. What are the hope for deliverables from that side of the effort?
yeah, a nearer term catalysts right now, with 3 drills turning, we'll probably maybe getting a fourth drill in to help increase the efficiency of what we're doing, where we are, that variable topography, I'm using my hands again, requires pads to be constructed to put the drills on, obviously. They're like little mini civil engineering projects, right? And so they've got to be well coordinated and established so that we're moving drills from one to the next to the next. But we want to make sure we're doing that very efficiently with very little to no downtime with between the drills. So we're focused on that right now and increasing our rate of drilling. And that is all towards, as I said, moving towards bringing in and developing a new resource contiguous with Tesorito, as well as completing the infill drilling of Tesorito, de-risking that, bringing it to the measured and indicated category. In doing so as well, though, increasing its value, its grade, and so forth. So that by having these two plus the existing Mira Flores, we have something that's really ready to go into pre-feasibility. Uh, we won't be done drilling Seabill by the end of the year, but we'll have enough done to describe likely an initial resource that will fold into that PEA. But by then, we still won't know the scope and scale of that deposit, which
Well,
is a
is
nice
one ever
problem to
done
have.
drilling? But a start. Okay, so
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 let me finish that. The
go ahead.
catalysts for the end of the year, based on that backdrop, is an updated resource for Tesorito, either at the end of the year or very early in Q1. The same for Seabell, but most likely very early in Q1, an initial resource. That is why, with that sort of material change in our resources as well, we will satisfy our requirements for technical reporting as well with an update to a PEA, because it too will move the goalposts in terms of the scope and scale of the project that I've described. So there's those three big catalysts coming at us. But at the same time, we're continuing to probe at depth beneath these surface ounces that is, in abundance. We're still unlocking our understanding of the geology there and the potential for feeder systems at depth. We're already starting to sniff that beneath Tesorito with the drilling and press releases we put out. We feel there's similar potential nearby to the north of Tesorito and possibly beneath Seabill as well. The drilling just has to be done. So that, and there's yet another discovery contiguous with Seabell to the south. It's called Chusco. It's not really drilled yet, but it's an opportunity for us to get some early holes in, test holes, if you will, to test the viability for potential resource as well. That could be an early catalyst one could see over the next, 2 to 3 months as well as we
Quite
march
interesting.
forward.
And as I understand, you're pretty well cashed up to pursue that. You just took in like 20 plus million from some warrants. And
Not
much of that
from
do you plan to
warrants.
spend this year? And
Yeah, that was an equity raise that we did. Uh, the timing was right for that for the reasons I just explained, but also on the market side too. So securing that allows us to really continue our march forward with the next 10,000 to 15,000 meters before the end of the year, to really, as I said, secure an update and an expansion of our resources, make further exploration, discovery type drilling, if you will, to depth, as well as next door in that true scale opportunity. So we're well positioned financially to do that now. And from there, that'll kind of be a natural checkpoint for us to determine what else we're doing now. In parallel with that drilling, as I said earlier, we're starting up the engines on engineering, fundamental engineering, the metallurgy on Seabell, more engineering on Tesorito in terms of metallurgy. Geotechnical work now starting where the pits would likely be, where we see some infrastructure, hydrological test work, all the fun stuff that happens behind the scenes. We start to get that going, in preparation for the next logical steps of the project and the de-risking stages of pre-fees and beyond.
right, right. But with three rigs, you're not going to spend all of that in this year. So that should definitely get us to the new resources and to the new PEA. Does it
Correct.
get us to the PFS maybe, or
No, no, that drilling I spoke of would probably take up just under half of that. And from there, as I said, we'll then determine what we do next and when we want to see that. But beyond that, the next logical step, as I said, would be to close off that drilling into a resource or resources and then fold that into a PEA and a technical report in Q1. But beyond that, we'll throttle it and determine how quickly we keep marching towards pre-feasibility, depending on how markets are and how receptive they are to what we're clearly bringing to the table and doing exactly what we said we'd do, 6 months ago to a year. And that's a big part also of what I bring to the table is that discipline that we are quite focused on execution and delivering these
We like
kinds of.
CEOs who do what they say they're going to do. So in this case, it seems fairly straightforward. We have resource upgrades at Tesorito. We have hopefully results consistent enough to point towards a new resource at Cibo and maybe some blue sky potential beyond that.
Correct.
And so as an investor, that's what I would look forward to this year. Anything else? That's
Well, I
cool.
think
Anything
when you
else?
stand back and look at that, I mean, with any project, particularly the stage we're at now, it's capital and time. It's kind of the way the engineers talk, right? That it's, you know, capital and time. If you're managing your capital tightly, then it may extend the timeline of your project. If you have an abundance of capital, then you can move a lot faster. We're at that stage now. We're unlocking this in layers, like peeling an onion in a disciplined way. We're not getting out ahead of ourselves, spending more than we need to right now. It's about unlocking and delivering tangible value to shareholders. That first step of, approaching a double, if not exceeding a double of our resources, I would challenge that anyone in our peer group, or even outside our peer group is doing that in a year's time, like Tiger's doing right now. And of course, then to follow that up with a significant shift in the scope and scale of the project and value of it is also what we're bringing to the table. And then it's just de-risking it and advancing it towards and through those stages, as I said, particularly to inform those key steps. It's not just doing it because maybe you have capital and whatever. It's about informing the next steps to be able to move intelligently and efficiently through a formal consultation process, for example, for permitting. You have to be reasonably informed in terms of
Sure.
what your impact will be through the process.
Thinking about what you're saying, though, in your target, you've got a couple million in the bag. You're hoping to double that. That doesn't get us quite to the proverbial 5 million ounces that's said to attract the majors, but you have a road path in that direction. So without asking you to disclose anything in an NDA, can you say, do you have anybody in your data room? Is anybody potential suitors looking?
We have interest. I'll comment on that in a way that I can refer to my experience. 5 million is not the magic number. 2 million is. When you've got 2 million ounces, producers sit up and pay attention, particularly the majors, because they do this and say, right, let's assume you have a 50% conversion rate into economic ounces. You've already had 1 million ounces of productivity and production. Now it's about scale. So if you're able to show an aggressive growth curve in terms of your scale, which is what I spoke to you earlier about in terms of what will drive real value in this project for us, it's scale. We're very much on a warpath to delivering that and demonstrating, okay, we're doubling that to, 4 million or beyond. We don't know yet until we get the work done and drilling. But the point is, it's there in front of us to capture. That has them paying that much more attention in terms of, ooh, okay, now you've got the scale that interests us, where you're going from 100 to 150,000 ounce producer, which we're already at with 2 million ounces in the PEA we've demonstrated, to something that would be significantly larger, that would attract large mid-tier to senior producers. And of course, we know this. That's what we're focused on, but it's not about focusing on some kind of attractive exit strategy. Again, it's about being disciplined and delivering something that delivers the highest value, the best returns in the most responsible way for our shareholders. That innately attracts attention from the producers. So we're checking the boxes and garnishing that attention, but we are heads down right now executing. And I think those that are watching us know that. know and prefer that we continue our march in de-risking that for any potential suitor, assuming there is one. Really, our focus is to get to a construction decision. We are capable of moving this forward, quite effectively through construction and into operation. But we know it attracts interest. It already is. So, when that time comes, that's when you reevaluate what the best pathway is for your shareholders.
It's easier to hear that from a guy who's a mining engineer than from a geologist.
Well, I guess there's a little more certainty baked into it in terms of what that pathway is, and what Tiger at least is focused on in terms of getting.
Understood. Okay, well, I think I have a pretty good grip on the story, and I know what to look for from your press releases going forward. I always have to ask everybody, though, if you want me to put my hard-earned money into this story, how much of your own have you done? And I don't mean free director's options or something like that. How much cash have you got skin in the game here?
I'll put a few 100,000 in, a few million shares for sure at lower prices. But as I said, that skin is also measured by what you didn't want to hear, and I won't quote it, but people can find it publicly. That incentive that's there. But honestly, I'm more incentivized as the team that surrounds me in our opportunity to deliver something that checks all the boxes in a way that we know is not abundant in our industry. So that is a massive motivation for us to do. And it's not an "I told you so" situation. It's an opportunity that we're in, that through our own skills and perseverance, we now hold 100% of. And we are focused on delivering and converting that to value to shareholders, right?
Okay,
Our skin in that is part of that for sure. It's clearly a big part of why we're here, but it's not the only reason.
fair enough. Okay, well, you've been a good sport, Robert, for some, not hostile, but tough questions. So I'll let you have the
That was a
last
great
word.
question, Lobo.
Anything else that you want to make sure that our audience takes away from this?
I think I'll encourage your audience to, if they're not already, to pay attention to Tiger, sign up on our website, reach out to get connected so that you're in tune and shoulder to shoulder with us on our news flow, because we are aggressively growing this. And it's not just ounces we're after. We're aggressively moving this project forward and de-risking it. So through every one of those steps, we're unlocking significant value. I think it's a great time right now, given the turbulence in the macro market, to enter into Tiger. Certainly, we continue to do so. So again, I encourage people to.
All right, can you be specific on that? Have you bought the dip?
I've bought some in the dip as well. Pretty much our entire management team has. Yeah.
Very good. Okay, we'll look for that in the disclosures. All right. Well,
Yep.
thank you very much. You've been a good sport, as I say. Keep us in the loop, and we wish you the best. And we will be following with interest.
Thank you, Lobo. I appreciate it.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.